Welcome back to the Trend Trader channel. In today's video, we are going to be talking about bonds. What are bonds? Remember, previously we had a video where we were talking about the different asset classes that investors can buy whenever they're investing. Most of the time in the YouTube channel, we are talking about shares or stocks, whereby we buy shares in companies that are listed in different exchanges. It could be the JSE, which is the Johannesburg Security Exchange, or shares that are listed in New York, or shares that are listed in Australia. So we know that shares are an asset class, but the other asset class that investors can invest in, they include government bonds or corporate bonds. The government are coming from the government or the state, and then the corporate bonds are coming from different companies that are raising money by issuing these bonds. And then also real estate is another asset class that people can invest in. But in today's video, what we want to talk about the government or the South African Retail Savings Bond. The reason for that is that you can see that the interest rate for the 5-year fixed bond payment, it's about 10.5%. This means that if you invest in the government savings bond for 5 years using the fixed rate, you can expect to get about 10.5% on your investment. Remember that you can invest for 5 years, and if you don't withdraw the interest that is paid, that interest is going to be added back into your initial investment, meaning that you can compound your returns. And I think that that's the best way to do it. Don't consider to withdraw that interest payment. Rather, consider that you reinvest it so that you can see how much money you can make at the end of the year. So now we are in July. Remember, in South Africa, July is the national savings month, and fortunately then the interest rate for July was increased to about 10.5%. But you can see from the website of the RSA Retail Savings Bonds, they've got different kinds of interest rates that they offer. They've got a fixed interest, and then they've got inflation-linked interest. So whenever you want to buy bonds, you can think of inflation. Inflation is always going to be there. The inflation can go up or down, and if the inflation go up, you want to ensure that your capital, your invested capital, it grows in line with inflation. If you buy a fixed rate bond, if the inflation outpaces the rate that you'll be receiving, then your cash could lose its purchasing power. But that is a decision that you have to make. The purpose of this video is to talk about the fixed interest, which is currently at 10.5. But if you look at the inflation linked for 5-year bond, it is sitting at 3%. But this can be adjusted. Whenever the inflation goes up, the rate could be adjusted. And also if the inflation goes down, the inflation rate or the interest rate, it could be reduced. So you understand that if you go for the inflation linked, then that rate is going to fluctuate depending on how that inflation changes. But my personal opinion is that this 5-year fixed interest rate of 10.5% is really attractive, especially if you have something that you want to purchase 5 years from today. It could be anything. You could be saving maybe to put down a deposit for a car or house, or anything that you want to do with your cash. Remember that with bonds, in theory, the principal is safe, meaning that if you invest your money there, the value of your investment is not going to go lower because it's bonds. But remember that it's not a matter of high risk, high reward, but it's just the nature of the investment. Bonds and cash and money market are somewhat a safer investment compared to shares and real estate. The word I'm using, safe, maybe it's not the correct word, but that simply implies that the value of your investment is not going to go up and down. So the value is fixed. And for that reason, that is why that the interest rate in such an investment, or the rate of return in such investment, is usually lower compared to the investment where the value can fluctuate. So once again, like I said, if you look at that 5-year rate, we can see that that interest rate is at 10.5%. Whether you call it a yield or interest rate or whatever, it doesn't matter, as long as you understand that we are looking at 10.5%. Then now they also have a calculator here. You can use this calculator to estimate how much money you can get back depending on the investment. Remember that we are talking about the fixed interest. You can see that There is a calculator for inflation linked, but in this case we are looking at the fixed interest for the 5-year bond, but it automatically calculates for all the periods. If you want to invest for 2 years, you can do that, or for 3 years you can do that, or even if you want to invest for 5 years, you can do that. The reason why we're focusing on the 5-year investment period, it's because it has the highest interest rate. Then also when you look at this site, we have the option of reinvesting the interest. We also have the option of receiving the interest twice per year, or also receiving your interest only on a monthly payment. But remember, if ever you get back your interest, then you miss out on that opportunity to compound your return, right? So depending on the amount of money that you have or that you're planning to invest, in this case their default value is 1,000 rand, but you can change the figure to whatever amount that you want. For the purpose of this exercise, we're going to change it to 10,000 rand, and then we're going to estimate that to see how much you can get back if you invest 10,000 rand into these bonds. Remember, this is just based on portfolio allocation. 10,000 is just a theoretical value, depending on how you want to structure your investment. By that, I'm talking about how much portion of your investment you want it to be in bonds, real estate, property, shares, and everything that you can invest in. But I'm just using a figure of 10,000 rand. So now we can see that if you invest 10,000 rand for 5-year fixed, at the end of that 5-year period, you can expect to have earned about 6,694 rand. That is the interest. So what you're going to get back is 16,694. So here we can see that you're going to get just about close to 67% return on your investment, right? But that is based if you are reinvesting your interest. If you receive your monthly interest, then you will be receiving the interest. Then at the end of that 5-year period, you will get back your 10,000 rand as it is. That is why I said that it is better to consider investing it, reinvesting those interests, so that you can compound your returns. And then you can see when the interest is going to be paid, starting from September 30th all the way up until July 10, 2027 for the 5-year period. But also for the 2-year period, you can see the 2-year and the 3-year period. Then for the 2-year period, you can expect to receive about 1.8 or 1,800 rand, which is about 18% return on your investment. And then for a 3-year period, you can expect to receive about 31% of the capital that is invested. Okay, so now that you know that you can invest in this government retail savings bond, then how do you go about purchasing these bonds? You can purchase these bonds. You can see you are already on the website, the retail savings bond. Then there's an information there about this. You can see that they work from Monday to Thursday between 9 a.m. and 3 p.m. and then on Friday they work from 9 a.m. until 12. There are some walk-in centers that are open. They're open on Monday and Wednesday between 10 and 2 p.m. But they also encourage clients to register and apply online so that it could be quick. Then you can see that if you have any questions, there's an email that you can use there, which is queries at RSA Retail Bonds.gov.za. You can also fax a document, even though I think that fax is an archaic way of communicating. It's better to send an email. Okay, then you can see there are different documents that you can find in there, but you can also contact them. If you go to the contact them tab, you can see there's an email that you can send an email. Well, I don't know if they will be quick in terms of responding to phone calls, but you can see that there is also a helpline, and then you're also going to need to have your investor or ID number in order for them to be able to assist you. Let's see what kind of information that you can find under documents. We can see that under documents you can right click, you can get the documents, and then for the application forms, everything that is there. You can see there's an application for inflation linked or application for fixed rate savings bond, and then there are forms if you want to withdraw your money in terms of early withdrawal, different whether it's below 12 months or it's more than 12 months, and then if you want to restart your application form. But there are forms that you can find in there. The places back in the day, I used to know that you can buy the bonds either by going to the Treasury, depending on where you live. If you live in Pretoria is closer, you can just go to the National Treasury. But some people, you can buy it, they say that they can buy them at Pick n Pay. You can also buy them at the post office. That's if you can find a post office that still works. But that's the information that I wanted to share with you today. Okay, when we go back to rates, we're going to see the same rate that where we started again. So I'm just trying to find a place where they say you can buy this. Okay, under overview, there's an option of where you can buy it. Then you see you need to provide your details and choose the bonds that you want. And then they say that you can use the South African Post Office, or you can also use the website, or you can just go to the National Treasury. Like I said, it's in Pretoria in Madiba Street. You can find there. And then once you have registered, you can also do it telephonically. Ideally, it's better to do it online, or else you can go to the post office, so meaning that you can't buy it at Pick n Pay. So that's it that I wanted to share with you today, the information regarding the retail and savings bonds. So if you are an investor that is looking to diversify your investment, to add another thing into your portfolio, something like the retail savings bond, remember the benefit of the retail savings bond, especially the government backed bonds. The government will never run out of money, because whenever the government need money, they are just going to tax you so that they can generate that money. But also the principal is safe, meaning that the value of your initial investment is not going to go up or down, it's not going to fluctuate like it happens with the shares. So that's it that I wanted to share with you. So if you found this information useful, if you haven't subscribed to the YouTube channel, please consider subscribing. And also, if you found value in this information that I just shared with you, please feel free to press the like button, and also feel free to share this information so that you can help other investors. So that's it for today. I will see you on the next video.